The XRP 589 theory is running absolutely wild right now. And I don't mean quietly trending, I mean full-blown Twitter meltdown. X timelines are on fire, and people are either convinced that XRP is heading to $589 per token, or they think the entire thing is complete horseshit and embarrassing the crypto space. And just when you thought it couldn't get any crazier, New Year's Eve hits, Times Square lights up, and the 2026 sign appears. And suddenly X is convinced that the lighting pattern around it has 589 bulbs, and that fact must be a sign, a secret message, and a nod towards the 589 theory. No joke, the feeds have gone feral on X. So today, we're not just here to hype this, and we're also not here to laugh at it either. We're going to slow everything down and actually investigate this properly. Does the XRP 589 theory have any substance at all? Or is it just another crypto myth that spiraled way out of control? So, let's get into it.
I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor.
Quick one before we continue. Today's video is sponsored by BloFin, an exchange that I use and I also genuinely recommend. They've got an exclusive sign-up bonus of up to 100,000 US dollars available by using my link in the description of this video. That link in the description is exclusive. If you go to BloFin Direct, you won't be getting the sign-up bonuses that are available. If you're trading anyway, it's worth a look. Now, let's get into why XRP 589 theory is blowing up again. The important thing to understand is this. The 589 theory isn't new. It didn't suddenly appear because of one tweet, one influencer, or one price move. It's been around for years, quietly sitting in the background of the XRP community. But right now, it's exploding again because of a few major things have changed. Regulatory clarity has improved. XRP ETFs exist and institutions are openly building on the XRP ledger. And retail confidence is slowly creeping back in. When that happens in crypto, people don't just look at the price. They start looking at destiny. And 589 is one of those numbers that represents more than just a chart target. It represents a belief that XRP has been misunderstood for a very, very long time. At its simplest level, the 589 theory claims that XRP could one day be worth $589 per token. Not next week, not this cycle, not because of hype, but because of what XRP was designed to do. XRP wasn't created to be a meme coin. It wasn't created to replace Bitcoin, and it wasn't created just for retail speculation. It was designed as a bridge asset, a tool to move value between currencies instantly, a way to replace slow, expensive, pre-funded international payments, a system that is built for institutions, not influencers. The 589 theory argues that if XRP actually fulfills that role, then price isn't optional, it's required. This is where a lot of people completely misunderstand the theory. 589 didn't come from a Ripple white paper, or a secret roadmap, or even a prophecy, or even a leaked bank document. It came from early community modeling. Years ago, people started asking a very uncomfortable question. If XRP is used to move trillions of dollars globally, how expensive does each token need to be so the system works efficiently? Some people ran liquidity models, some people ran velocity assumptions, and some people looked at global FX settlement volumes. And one of those models landed on a number in the high hundreds, and that number was $589. Once a number like that enters the crypto culture, it stops just being maths. It becomes law. What really turned 589 from a spreadsheet number into a legend was one moment. Ripple CTO David Schwarz acknowledged the theory existed, not confirmed it, not endorsed it, not promoted it, but he also didn't dismiss it as nonsense. And in crypto, that matters, because when somebody that close to the technology doesn't immediately laugh something out of the room, people assume there's something there. Whether that assumption is fair or not, it's stuck. To judge the 589 theory properly, you have to strip away the memes and remember why XRP existed at all. Ripple's pitch to the banks was never buy XRP and number go up. It was why lock capital all over the world in Nostro accounts when XRP can settle value instantly. That's not a retail use case. That's a financial plumbing use case. And plumbing assets don't behave like hype coins. They behave like liquidity tools. This is where the 589 theory stops sounding insane and starts sounding a little uncomfortable. Global FX markets move trillions of dollars per day. Real money, real settlements, real institutions. Now here's the key concept most people miss. Velocity matters. If XRP is cheap, you need huge volumes of tokens moving constantly. Liquidity strain increases and slippage becomes a serious issue. But if XRP is expensive, fewer tokens are needed per transaction and liquidity becomes more efficient and the system scales better. This is why some people argue XRP cannot remain cheap if it's widely adopted. Not because holders deserve it, but because the mechanics demand it. This is where the critics step in and say this. $589 XRP would mean an absolutely absurd market cap. And they're not wrong if you're thinking like a stock investor. But FX liquidity doesn't behave like equities. Money flows through systems. It doesn't sit there waiting to be valued like shares. So while the market cap argument is valid, it's also incomplete. It makes the theory harder, but not impossible. For years, XRP's biggest problem wasn't technology, it was regulation. The lawsuit with the US Securities and Exchange Commission didn't just suppress price, it suppressed adoption. And institutions avoid uncertainty. But now, legal clarity has improved, ETFs exist, and infrastructure is being built. That doesn't guarantee 589. But it removes the biggest historical argument against long-term valuation models. Now let's talk about the moment that sent X completely feral. New Year's Eve, Times Square, and the 2026 sign. Within minutes of it being shown on primetime TV, there was a news reporter that said, this sign has 589 bulbs. And X went into meltdown. Then the crypto community has completely lost the plot. They're saying things like this is a sign they're trying to communicate to us through this message. Was that evidence? Hard concrete evidence? No, absolutely not. That was a pattern recognition mixed with alcohol and confirmation bias from the XRP community. But the reaction matters because it shows how deeply embedded the 589 has become in XRP culture. It's not just a number anymore, it's a symbol. To many XRP holders, 589 represents being early, being mocked, holding through regulatory hell and long-term conviction. It's not about when Lambo, it's about validation, and history tells us something uncomfortable. Narratives don't disappear just because people say they're unrealistic. Bitcoin didn't. I was an early adopter in Bitcoin. I bought it for $1. And I can assure you now, absolutely nobody back then was talking about Bitcoin being 100,000 US dollars plus. And I mean nobody. So, is the XRP 589 theory complete horseshit? Probably not. But is it proven and nailed on? Also, probably not. It lives in that uncomfortable middle ground where it's not delusional and it's not destiny. And it forces people to think beyond short-term charts. The real question isn't, will XRP hit $589? The real question is, if XRP actually becomes a core piece of global finance, what price would logically make sense? So drop me a comment down below and let me know, is there something in the 589 theory? What do you think about it? Is it complete bullshit? Or do you think it's got some legs? Thank you for making it all the way to the end of this video. Please like this video, press that hype button if there's one available, and also subscribe for more videos just like this. I'll be seeing you on the next one, and remember this, the strength of the wolf is in the pack.